This video is for educational purposes only and should not be considered financial advice. Putting it all together, ICT, the Strat, what would Joel do, and Fibonacci. Outline. Intro, review of concepts, trade preparation, trade execution, and recap. Intro. In our most recent trade, we put together all of the trading systems we've recently covered to execute a successful options trade on QQQ. In this video, we will go over how we did it. Review of concepts. Putting together the What Would Joel Do method, the Rob Smith Strat, and the Fibonacci Sequence, we framed a successful trade for a 3-point move in the Qs. The main premise for the trade was the What Would Joel Do method of bar counting using the EMAs, which we talked about in one of our earlier videos. We will put a link to that video in the corner so you can see it in depth. But the general idea is that since the EMA is an average of candlesticks, it will predict when price is going to return to it. Basically, when price moves away from a 200 EMA, it will return to it within 200 candles, give or take. Trade preparation. The second tier of our analysis was the weekly range Fibonacci measurement. Price had dropped a substantial amount and then started retracing. It hit the 50% Fibonacci retracement on the weekly chart, and price usually reacts from this level. We wanted to see a move to the downside to the 161.8 or the 238.12 Fibonacci extension on the 15-minute chart during the New York Open. Here we see a weekly chart of the QQQ, and we see how this range that was created had a retracement into the 50% level. And here we have the 15-minute chart, where we see the last time price touched the 200 moving average, which is magenta, is all the way back here. So this is the start of the day, and we see price makes a move to the downside. So on the 15-minute chart of the NASDAQ 100, price had moved away from the 200 EMA for 369 candles and had not revisited it. We knew at some point it would make an attempt to reach it. It may not reach it exactly, but it would make that attempt. Trade execution. After a break of structure, or if you're using the What Would Joel Do method across of the 5 and 13 EMAs, we waited for a retrace at 9:45 a.m. and got in once price broke below the 9:45 candle. So here we have a break of structure with this swing low. Price closed below it. You also had a cross of the 5 and 13 EMAs. Then price moved to the downside. This is a 5-minute chart where you see at 9:30, 9:35, 9:40, and at 9:45 you had a retracement right back in to the 5 EMA. Then once this candle, the 9:50 candle, broke below the 9:45 candle, that was our entry. We took price all the way down to the 238.12 fib extension, where there was an abrupt and clear change in direction. If you've seen our other video on the Fibonacci sequence, you will know that we either take partials or close the whole trade at that level, and you can see why. We'll put a link in the corner to that video. In this instance, price is still bullish, and this trade is counter trend, so we closed the whole trade. Again, here's our break of structure. Price broke this candle. This is our strategy, where you have a 2, 1, 2, and then we measured from here to here, this level, and that gave us our 238.12 Fibonacci extension. not taking the measurement from here and going from here. Remember, ICT said the candles tell the story, the wicks do the damage. These long wicks are basically the damage. This candle was on news. So this Strat strategy 3 candle, which takes out the high and the low, happened on news. And that's what the market loves to do, which is take out both sides of traders' stop losses. And that candle is not used in our measurement to the downside. Here, you can see where price completely reversed from that 238.12 Fibonacci extension. It came right back up and took out the stop loss area and the beginning candle of the opening price. This is the Rob Smith Strat strategy. We see the broadening formation. Once price takes out the low of one side, it takes out the low on the other side. And that was foreshadowed by this candle right here. Now, if you wanted to trade with the trend on this day, you could have waited for this down move and then waited for the retrace. Since you know that price reacts from the 238.12 level, you could have waited for it to hit that level. Then you could use one of the Strat patterns of a 2 down, 2 up. And that would have gave you a trade right here with your 2 down candle and your 2 up candle, all the way up to take out liquidity on this side. So the ICT concepts are liquidity. The Rob Smith Strat concepts are the patterns, which is the 2 down, 2 up. And in our case, the one we took was a 2 down, a 1, and then a 2 down. So a 2-1-2 pattern. And the what would Joel do method was the counting of the EMAs, the bar counting. And then the Fibonacci sequence is what we use to measure our movement to the downside. And also using some of our concepts from our previous videos on the Strat, we talked about the middle of that broadening formation. We see in the middle, price does another Strat pattern with a 2 down, 2 up. That could have also been an entry to the upside to add to your position where you entered here. Again, this is on a 5-minute chart. So we took our Q from the 15-minute chart, and then we took our entry on a 5-minute chart. To recap, using multiple trading systems as confluence can really help you refine your trade idea to frame a high probability trade. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.